Thank you for joining me. In this video we're going to overview subscriber-wise segmentation. You'll understand why this is so important for cable operators, for telecommunications operators. Effectively, what we want to do is give operators appropriate risk and selling categories so that they can segment their customers appropriately. In other words, what we don't want to do is have simply a score where we say, for example, if the score is above 650, we approve. If it's below 650, we deny or we require the same deposit for everyone. What I want you to keep in mind when you're looking at this video is that someone in the bottom 1 to 5% of the credit consuming population is much more risky than somebody in the bottom 20%, for example. So what we want to do with segmentation is to make sure that we risk rank order customers appropriately based on the level of risk. We'll understand how that process works with SubscriberWise. Before we do though, let's consider that SubscriberWise is the only company to use a genuine FICO score for risk management of communication subscribers. We were the first company in the United States to leverage the FICO 8, which is the very latest scoring technology. Why is this important? A, because virtually every single underwriting decision in this country is made on a FICO score. The other reason, fundamentally, is that FICO is well known by consumers. So if someone were to ask why were deposits indicated or how did the operator make the decision, what was the scoring technology used, the cable operator could direct the consumer to FICO's website where there's a tremendous amount of educational information available. FICO has made a significant investment. So there are some profound benefits for using FICO. One more thing I'll mention before we get into the demonstration. In the United States, credit reporting system that we have here is an elaborate mechanism, and you have to understand that it's a voluntary system. There's no mandate, for example, that the leading banks and lending institutions, automobile dealers, etc., that they use the credit reporting system. So the question is, why would companies in a voluntary system make the investment to use a FICO score rather than the little used information or educational scores that are also on the market? The answer is because FICO scores work. They are proven. So there really is some tremendous value in using a score that is recognized by consumers, where there's a tremendous amount of education and information, and where there's a demonstrated and proven track record as reflected by the overwhelming use from companies and organizations that mitigate risk. Let's log in now to SubscriberWise and we'll look at some of these examples of how segmentation works. You'll also see that SubscriberWise has additional technology that, again, is reflective of our industry's needs. In other words, if a consumer is a subprime consumer, but at the time they are decisioned, they have no collection accounts, there's no past due balances, and they have a credit file that demonstrates history, then the system will decision them more favorably. So the credit bar is never set high. It's not in the stratosphere. We're not asking a consumer to have an exceptionally good credit score. In fact, a consumer can be in the bottom 20%, for example. They can be a subprime consumer and still decision favorably. Now, one more thing, keep in mind that we are using FICO scores. We're using credit data from TransUnion that has files on more than 210 million adults, so it's a very robust system. But most importantly, what we're doing is we're calibrating the FICO technology to the performance metrics of cable customers, and we're building that around your business process. In other words, we will give you some guidelines and suggestions for how to mitigate the risk, but ultimately you will determine what offerings, what products and service and equipment you want to mitigate your loss, and then what amount of security deposit you will assign based on the distribution of credit scores and national delinquency rates. So let's log into SubscriberWise and understand how operators use segmentation technology for the benefit of risk mitigation, but also for the benefit of their customer. Remember, with SubscriberWise, we are only asking customers to consume services responsibly for 6 months. We know that that's sufficient time to weed out a true non-pay from the slow pay. We are still going to have write-off. We understand that we are not using this system to guarantee or to eliminate our bad debt. What we're going to do, though, is manage the bad debt. We're going to bring it to a reasonable level. Now, I logged in here as an administrator. Basically, administrators can control all of the functions in the system. There are 3 logins for SubscriberWise. We have the administrator, we have a supervisor, where that individual can access only the report viewer. They can't control any of the business rules of the system. But they can also redecision a report that was previously stored. A CSR, for example, once they submit a report and that report is stored, if that same customer called back 2 or 3 days later, the system would simply retrieve that stored report. But if there was some reason for the report to need to be redecisioned, to regenerate a fresh credit report, a supervisor could log in. And that's rarely a situation that comes up, but if it does, for example, if a consumer said, well, I had some adverse information removed from the credit report, it's been updated, I'd like to have a new decision, then that functionality exists. So we're going to look right here at the segmentation, this quick presentation. I have about 51 reports in the system. We're going to look at the non-reviewed reports, which are all of them currently. And I'm going to sort them by credit score. We'll submit the query. Here's our 51 reports. And this is the kind of information that you as an administrator or a credit manager would be able to log in and see. And this is very, very valuable information. You are going to have a comprehensive view of your customer. So what I want you to notice here, we're going to look at the score and decision column. For example, look at all of the zeros as you scroll down here. 0, 0, 0, and then we get into the actual FICO score. You can see a 471, a 473, and scores continue to improve because we're sorting in ascending order here until we reach the highest scores, or in SubscriberWise what we call a very well qualified decisioning. But let's look at the zeros first, and I'll talk briefly about that. There are more than 210 million adults who consume credit in the country. And interestingly, in our industry, in the cable industry, approximately 18% of prospects are not actively consuming credit. Now, when you see a 0, it doesn't mean that's the worst case scenario. What it means is you have a consumer who has a credit file at the National Repository. For example, they have a file at either TransUnion, Equifax, or Experian, but they're not actively consuming credit. Because in order for a credit system to generate a score, in other words, in order for a scoring algorithm to compute a score, there must be at least one active trade line on the consumer report. That could be a Visa, a MasterCard, a student loan, a mortgage, an installment loan, any kind of credit account that's booked on that bureau report with a method or a mode of payment that is updated at least one time in a 6-month period. That's what generates a credit score. So these are consumers who are not actively consuming credit. And again, remember, that's 18% of your population. Now, keep in mind that we are a credit-consuming nation today. So it is a fact that the absence of credit is credit risk. Generally speaking, consumers who are not actively consuming credit demonstrate additional risk factors. And our data is reflective of that. And we have data going back more than 10 years. So let's look at this first one. We have a 0 and a level 3 for Diane AAA. If we view this report, and this is again what makes SubscriberWise so profoundly important. What the system is doing here is it's going to treat her favorably. She is segmented into a level 3. Remember, a level 8 is the worst. A level 8 represents the very bottom 1 to 5% of all adults who use credit. So What triggered this decision here? If you look at the credit report, she has no credit score, but she also has no collections or nothing past due. So what the system is doing is it's saying there are some redeeming characteristics here. This may be a mature cash spender. Or it's somebody who has at least 1 year or more in the credit file. In fact, we can see that this individual has been in the credit file since April 1st, 2011. That means that there's at least 1 year of history and there is no adverse information. So she's segmented into a level 3. Let's look at a level 5, a similar scenario. Here we have a 0 with a level 5, Kenneth Abbey. If we view this report, you can see we have slightly higher deposits. The risk is slightly higher. What triggered that additional risk? We notice it's the same scoring in credit summary. A 0, no scoring factors. Again, no collections and nothing past due. But look at the in-file since date, May 1st, 2012. In other words, this is a brand new credit report. This is a consumer who at least on one occasion has applied for credit with another credit grantor, and a credit file has been created at the National Repository. So there is a credit file, but there's just no activity on that bureau report where we can get a credit score. If we look at a 0 with a level 6, for example, for Jean Aaron, what triggers this? Additional deposits indicated. Here we have 2 collection accounts, so another indication of higher risk. Let's take a look at a level 7 and see what's going on. So a 0 with a level 7. Now we have collection accounts and past due balances, and the combination of a collection and past due balances are an indication of additional risk. Now subscriber-wise is so granular, for example, that if that collection number had indicated 3 or more in addition to the past due balances, this individual would be segmented into level 8, the worst case scenario, because we know that that is somebody who is going to have demonstrated high credit risk. Here's a level 8 with no scoring factors, no active credit in the last 6 months. And in this case, there's no past due balances, but you can see there are 9 collection accounts. That's 9 accounts that have been placed by a third-party collection to this credit report in the last 7 years. So although we don't know the individual circumstances, we don't know what triggered this, we know that this is a very high-risk consumer. And by the way, how do we know that? Well, SubscriberWise has been using FICO scores for more than 10 years, about 10 years. And we have data at Massam Cable that goes back to the 1960s. We have detailed payment history. In other words, we can see every check, every credit card payment, every movie that was ordered, all the programming going back for nearly 16 years. And what we did is we calibrated these performance metrics to the FICO scores as well as to these consumers who generate no active credit score. So you can be very confident in the decisioning with SubscriberWise. In other words, it will accurately decision your subscribers based on their credit risk. Let's look at a few more scenarios before we conclude. Let's take a look at Rhonda Walls and Mary Steelhead. You'll notice they each have a 576 FICO score. By all accounts, this is a subprime consumer. But what's interesting is look at Rhonda Walls. She's a level 4. She is segmented with modest deposits. In fact, remember, you're the operator. You control where those deposits will be set. So some operators might not require any deposit at all, for example, on their basic service. You could require a small deposit on your internet, for example. The business rules are at your discretion. But the point is, SubscriberWise automatically segments this customer into a more favorable decision level despite the exact same credit score. If we view the report, we can scroll down and look at the report. Here we have the credit score, genuine FICO score, as well as the factors that contribute to that score. And by the way, the factors are indicated by the seriousness of the impact of that factor. In other words, the most profound factor that contributes to this score is serious delinquency. Next, too few accounts currently paid as agreed. So the last factor has the least impact. Now, why was she segmented into a level 4 despite this poor credit score? Because notice there are no collections and no past due balances. Let's take a look at Mary Steelhead. Again, same credit score, but she's decisioned as a level 6. So what is SubscriberWise doing? It's segmenting her into higher credit risk. Why? Again, subprime credit score, but now we have 2 collection accounts and past due balances. These are higher indications of risk. Let's look at one more scenario. Margaret Higgs, Demetrius Jones. Margaret is given a level 2. Now again, I want you to understand that this is a favorable decision, relatively speaking, in SubscriberWise. This is how equitable the system will treat your prospective customers. This is why operators around the country are able to close their sales with sufficiently higher success, at the same time mitigate their losses. In other words, if you're relying on strictly a credit score, you are losing 20% of your sales because your decisioning is not segmenting successfully. And you're also, of course, not using a genuine FICO score. I have to stress that point. But if we look at Margaret Higgs, you'll understand now what's going on here. She's given level 2. Most operators around the country assign no deposits to that. And keep in mind, that's a poor credit score. That's the bottom 25 to 30% approximately. Not a strong score at all. But notice again, no collections, nothing past due. If we look at Demetrius, same exact credit score. He is given a level 4. Why? Because in addition to the weak credit score, he has collection accounts and past due balances. So that's how segmentation works. It's critically important. It will allow your system to strike the right balance between risk and reward. So I hope you'll consider SubscriberWise. There are far more benefits than I can show you here today, but you can see that segmentation technology is absolutely critical for a successful risk management policy. Now I'll conclude with this. We've been in business for 6 years. There are more than 30 operators around the nation that use this system. We only provide solutions to cable and telecommunications. This is our expertise. Since we launched this system in 2006, there has not been a single operator ever cancel or stop using this system. It works that well. Thank you very much for your time and attention.